Yeah, Andrew, the company causing all this stir on the stock markets today is called DeepSeek. It's only about a year old. It's an upstart out of China. They have an AI tool called R1, which is sort of their equivalent of things like ChatGPT or the Meta AI that you see in your Facebook or WhatsApp accounts now. It takes prompts, it answers questions. It can't create images or coding or things like that, but it's getting there. But the big thing that's causing all the disruption on the markets today is the fact that they claim, anyway, that they could do what the big boys do, but a lot cheaper. For example, their R1 program, according to DeepSeek, cost them only $5.6 million with an M to train, whereas programs like ChatGPT and Meta AI have tended to cost hundreds of millions, if not billions of dollars to train and operate. Again, that is the claim from DeepSeek. There's still a lot of research that has to be done to see how sure that is, but it certainly had an impact on the stock markets today. The Dow Jones, for instance, opened 0.8% down. It has since rebounded to just over even at this point, but it did see an impact. The S&P 500 fell by 2%. The NASDAQ, which has a lot of tech stocks on it, plunged by 3.6% on opening. Most of the declines that they're seeing on the stock market are concentrated on those tech companies, especially NVIDIA, which makes the chips that all these companies are using to run their AI. NVIDIA, at last check before I came in here, Andrew, was down 17% today. That's a company making a lot of money usually, so it's very interesting to see NVIDIA down so far. As for how the industry is seeing DeepSeek and accepting DeepSeek, they're looking into it. There's a lot of investigation being done, certainly by other AI companies, as to how it's operating so cheaply and what can be learned from it. Brian Jacobson is the chief economist at Annex Wealth Management in Milwaukee. He says this is an example, if it's to be believed, of just what a shoestring budget can do, and that necessity truly is the mother of invention.
They wanted to compete. They had perhaps a better algorithm, a better idea about how to train the models, and then also how to execute on it for answering people's questions. And they are using a slightly different technique, which is apparently, based on the data so far, a lot more energy efficient and efficient in terms of the chips that it might take as well.
Now, many of the stocks affected today have started to rebound slowly, and they are expected to over time, with a lot of lessons to learn on the AI side. By the way, DeepSeek, not one of the big players that we mentioned, and that might be why they actually saw a service outage earlier today, shortly after they became the #1 free app on the Apple Store. But they say everything is now resolved.